If you've considered using an alternative lending source but haven't heard of Bluevine yet, this review is for you. I'm doing a Bluevine review that is sponsored by BestSmallBusinessLoans.com. They're a great website for reviewing all sorts of funding solutions and other tools small businesses need. As a small business owner myself, I use Best Small Business Loans to find many funding tools that I can consider. Bluevine is one that I have considered, and I want to review for you why. But before we get going, let me tell you something about myself. I'm not a licensed credit advisor. This presentation isn't sponsored by Bluevine and is my opinion only. But what I will cover in this review is, what is Bluevine? What types of loans do they offer? What are their strengths and limitations? I'll tell you also a little bit about the application process and some of the rates and payment schedules they have. And then we'll look at the customer reviews. I want to take you through some interesting things that you should know about if you're looking through sites like Trustpilot. So what is Bluevine? If you look close right on their website, it tells you that Bluevine is something and it's not something else. For example, Bluevine is a financial technology company, but it's not a bank. Now, that's kind of interesting because Bluevine actually offers checking accounts. This Bluevine review isn't about the checking, it's about the business loan, small business loan products that I'm going to be telling you about. However, it's important to recognize they are a banking company with FDIC insured deposits, so they're a stable outfit. Bluevine's strengths are that they'll approve borrowers with low credit scores. That's kind of interesting, right? There's always a trade-off to a thing like that, the rates and who they'll approve. But either way, it's still pretty good for people that are that kind of business, kind of getting started, trying to get their feet under them. Now, the approval process doesn't take weeks, not even days. The approval process can take hours or minutes. They offer two types of loans, invoice factoring and lines of credit. Let's look at the first one. Invoice factoring is an interesting kind of loan. If you don't know what it is, let me clue you in really quick. It's if you have a business that has an agreement that you're going to get the money because you've completed the work, but let's say it's a big chunk and the client you're working with has a net 60 days policy, that kind of thing. Imagine, for example, that you're a small business and you've got $50,000 worth of business that you've completed and they have 60 days to pay it. Well, you've got to meet payroll in those next 60 days, or maybe you've got other expenses that are going to help you do phase 2 of their business contract, which is even more. And so you need some seed money to get going. Well, you can get a loan up to 85% of that invoice. That's 85% minimum, depending on how solid the invoice is. Now, you wouldn't have to get all of it, but it gives you tremendous flexibility. So the invoice factoring is a really interesting kind of loan, and you have to pay it back weekly. It's a 13 weeks or less repayment schedule. Now, this really works well for people that have the ability to pay that money back. 13 weeks is about 3 months. So if you have a net 60-day policy, which is all they will allow anyway, then you'll be inside the time. You get the money and then you pay it off. You don't carry the full interest. Rates for invoice factoring can vary anywhere from 1/4% per week up to 1.5% a week. Now, make no mistake, eyes wide open here, that's a 13% annual rate all the way up to a 72% annual rate. Yikes. Well, you're not going to carry it out to a whole year, a loan like this, so you're not going to pay 72%. But you got to think it through paying at that annual rate, right? If you can get it done in less than 13% of whatever you're going to take in, it might be worth it for you, especially if it leads to a bigger project and more revenues. But again, that's a measure of whether or not you are the right customer for this particular kind of product. To help with that, I've added this little bullet here that explains you should kind of think of it as if functionally you're willing to pay a rate of 25% annually. Now, if your credit score is good, then you might not have to pay that rate. But if you're one of those who is at a lower credit rate, that's probably where you're going to come in. That's the default entry area, I think, that most people will be offered. A lot of variables. You can never know for sure. However, when you apply for this, if you say to yourself, If I had to carry it out for a year at 25%, it would still be worth it to me. I know I'm going to get it in less than a whole year. I'm going to get it in 3 months. I'm going to get paid off in 3 months. So, maybe that's a quarter of that amount, and that's still worth it to me, then great, this is the right product for you. If that's not, if those numbers seem too high, or if you have some other source that's better, well, then you'd shop elsewhere. But you get my point. That's how you know whether you're the right customer for this product. The other type of loan they offer is a line of credit. To be accepted for this loan, you have to have a higher credit score, somewhere around 600. That's because this particular kind of loan is an unsecured line of credit. Unlike the invoice factoring, which had something attached to it, a kind of a collateral, this one is just about your business, whether your business is strong. They offer monthly or weekly repayment options. And they also have a 6 or 12-month payback period. So there's a lot of flexibility there, but you can see that it's set up to last a longer time for paying the money back. Again, you really want to be able to do these loans quicker than the full term. So keep that in mind. Whatever you're doing, make sure it's something you can pay early. Now let's talk about applying for the loan. It's very simple. And as I mentioned earlier, you get a fast response. In fact, when I tried to go through the loan application process, it only took me 5 minutes to fill it out, and the response came back in about 10 minutes. And now this happens with what's called a soft credit pull. That means they do check your credit, but not through one of the major 3 rating agencies. Through an independent party which kind of offers a buffer. It gives them enough information to make sure you're for real, but not so much that it's going to rack up points against you and hurt your credit. Now, you should know that if you shop around for 4 or 5 of these kind of loans, it'll add up, and it will eventually affect your credit for a little bit. Maybe, 5 points. It'll take you 6 months to get that back. That's what I've experienced anyway, as I've been doing all these reviews. But if you're just doing 1 or 2, it should not impact your credit at all. The application process, let's look at the screens themselves and the things you'd have to fill out. They're very simple. The questions are straightforward. How much money do you need? What financing type do you want? And then your identification information. And don't forget to read the fine print over here. There's not a lot of onerous stuff, but occasionally you will come across something that might be important to you. The way you answer the questions will determine what additional information you might have to provide. But as you can see, it's pretty straightforward stuff. Here in this form, it's asking you, tell us about your business. And again, depending on what you put in, there might be additional fields that they ask you to fill out. A lot of these kinds of forms are custom structured. And then finally, after you've provided the information they need, you'll be asked to connect your bank account. Connecting your bank account is a tremendous convenience, because if you're approved for the loan, then the money is electronically placed right into your account. In many cases, it can appear in as little as 24 to 48 hours. Well, that's nice. It comes with a condition, and that is when it's time for you to make a payment, they will take it electronically out of your bank. That's part of the game with alternative lending sources. It comes in very conveniently, but they're able to take it out on their own terms. You have to be prepared for that and know what the payment schedule is going to be like. So with all that being said, who does this kind of loan product actually work for? Well, the answer is businesses that are steady and have a need for bridge funding, just to help them get from one project to the next. Or if you have a high probability business project with low costs. These are 2 simple categories. And there's another category, and that is if you're a good, solid business, but you just don't have all the credit right where you want to be just now, and you don't want to make your credit score any worse by going out, spending the time and effort and credit hit of working with the traditional bank. Alternative sources could be right for you, assuming that you can really pay off the loan quickly and avoid the heavy interest fees that typically will mount up if you don't. Now let me tell you what customers say about Bluevine. They generally have great things to say. Good customer service. They're very responsive by being willing to talk to you over the phone. It's not just a do it online or nothing kind of thing. They're really willing to work with you and give you the information you need. They do have rates and fees that can be kind of high, but not particularly higher than most people providing alternative funding sources. Let's look closer though at what some of their reviews look like on Trustpilot. Now, whenever I'm looking at a review site like this, I always like to see something that has excellent and great or good, the top two categories way out there. And then they just sort of, steadily get lower all the way down to the bottom one. If I ever see the bottom two categories jutting out a little higher than the others, that's a warning flag to me. Well, as you can see here for Bluevine, Trustpilot reviews look like this, and the lower category looks pretty heavy. It's 11%. That's what's going on. 11% of the people have the lowest review. Well, okay, here's something you should know about. I looked close at what those reviews are, and you might want to go to Trustpilot and check it out for yourself. But if you do, what you'll see is their banking side. Remember, I mentioned that they do offer a checking account, right? They offer 1% interest, and so it's pretty attractive. But during the period of time, September to October 2021, the bank underwent a transfer from one named entity to another. And some of the funds got held up and frozen. So when they're talking about things like, these people are holding my money, that's not loan customers, right? Because you're not giving things to the bank, you're getting something from the bank. So the reviews are talking about checking customers that lost access that they didn't know how to resolve. And most of the reviews are like that. In fact, if you look closely at the customer reviews for small business loans, the vast majority of them are right up there in the excellent category. So if you're using this for small business loan alternative funding, you're going to find that most customers do that are happy with Bluevine. Now, if you're interested, you should check out the full review on bestsmallbusinessloans.com. There's a lot of information that goes into greater detail about the product mix and the rates and the services that Bluevine offers. I think you'll like what you read.